Well, welcome back, everybody, to another edition of the Forex Market Preview, the place where we take a look at what's going to be happening in the coming week and where I think the trades might be for that week. Now, as you guys know, I was out of town last week visiting, actually spending some time with my family. I didn't actually go out of town, but I was visiting, spending time with my family while my kids were out of school. And so I just took the week off from the F&P. But I want to cover some of the things that we talked about. I think there's a teachable moment in some of the stuff that I talked about in the last Forex Market Preview, as well as a couple of things that I think are going to be valuable to you as we move through the coming week. So let's go ahead and kick this thing off. First thing is first, let's just take a look at the euro. Guys, over the last week, the euro has really just been sideways. We haven't seen any forward or backward movement. I did not trade this all week long, but we did, well, I'll get to it here in a minute, but I stayed away from the euro USD all week long just simply because this consolidation wasn't giving me anything. It wasn't telling me where the market was going to go. As you can see up here, this is the previous resistance level, and so this is what we would be eyeballing to see if the market look for shorting opportunities. So if the market will rally up into this level at about 1660s, that's going to give us a pretty good place to look for shorting opportunities. If we move back down, really the only place we can look to be long is back here against 1146s, which is previous structure, and I don't really want to be long there just because look at this move. We've been very, very bearish. No sentiment change. They're talking about austerity now in the euro, which is what's caused the stability here. But we're still not seeing, with all the risks in Greece and everything else, still not seeing anything happen here as traders kind of wait to feel out what's going to happen in the euro situation. So it'll be interesting to see what happens there. Now, as you guys remember from not last week, but the week before when we had the last Forex Market Preview, the market had pulled back down into, we had broken above. I identified this structure resistance level, and the market had popped above that level, and we were pulling back into the previous structure resistance level. And I told you guys, I said, I think this is going to be a good place to buy. I mean, pretty decent shot. You've got a nice potential move up, and we could rally all the way up into this previous structure level around 155s. Now, we didn't get all the way to 155s. In the syndicate, which is the group that I meet with every single day and talk through these processes, we actually took this trade. We took the long opportunity, ended up making about 70 pips. But if you look over here, I want to take you to, not that one, this comment. This was when I put out this call, and I said in that call, dadgummit, I said in the call, I don't know why I have stuff open that I'm not using. Okay, there we go. So I said in this, hey, this is probably a pretty good place to buy. I said we've been bearish, but this break of structure signifies a shift in trend direction, even if it's just temporary. So as the markets pull back down into this structure level, you've got a decent place to buy. This was the response that I got. Most of you guys said great show, but I had this one comment. Long-term trade on the pound dollar is 90% short. No way is pound going to rally even in the short term. Now, guys, I don't want you to so much focus on the fact that I was right or that I was wrong. That's not really the teachable moment here, because I could easily have been wrong. The market could have absolutely continued to decline. But it didn't. It rallied. And the problem with listening to anyone and everyone online, see, the people who come here and that they spend a lot of time here, they recognize, the value in whatever degree in what I'm trying to teach and what I'm sharing with people. I give you a chance to see everything. If you come into the syndicate and you're part of War Room every day that we do every morning, I not only post every trade that I take, I also post when I get out and when I take my profits. So you get to see every single thing. Both Akil and I both do that. Akil is my trading partner at Trade Empowered. He trades patterns, and I'm trading structure inside of the syndicate. And so in every single one of those instances, you get to see every trade that's taken. And then not only that, you get to show up every single day, and we talk about the trades that we took and why we took them, and we discuss the rationale behind the trade. The idea is that you begin to see and understand what it is that we're doing and why we're doing it in every single trade. And in addition to that, there's other videos and stuff that come out that Akil does. But you get a chance to see exactly what we do. And this was an absolutely phenomenal week for us in the syndicate. We did just under 600 pips of posted trades. And there's no way to hide that. But what there is a way to hide is what you can hide is your identity online when all you do is post in chat forums or underneath somebody else's video telling them about, how good or bad their trading idea is. And you can make yourself appear to be whoever you want to. Super successful trader, awesome guy, multi-million-dollar hedge fund manager, whatever, because you're online. Nobody knows who you are. Nobody's doing stuff like this every single week for you. So this guy comes in and he posts his comment and he says, there's no way that the pound is going to rally even in the short term. And what bothers me about this is not the fact that he criticized me, because I could absolutely have been wrong. That's not the point. The point is the definitiveness with which he made the statement. There's no way that the pound is going to rally. Couldn't happen. And immediately I know that this individual is not a very successful trader. Because anyone who holds that mentality, anybody who holds a mentality that says there's no way I could possibly be wrong, there's no chance of it, that's a sure sign of someone who's hemorrhaging money in the market. Because you have to, in this market, always consider, in this business, you must always consider the fact that you may be wildly wrong about the market. And in everything that I try and do here, I try and explain to you guys, and I try to say, I don't really know. This is what I think. I play probabilities. What is the probability? And in this particular case, when the market breaks out of the previous structure high, and look at this. I even identified to you guys last week. I said, look at the market making lower highs all the way down until right here. All of a sudden, that lower high momentum stops, and we get a higher high, higher close. And I said, the market is telling me something. And the probability is, the likelihood is that as we pull back down into this previous structure resistance place level, that we will probably get a rally. And that there is potentially opportunity here to make some money. Could I be wrong? Absolutely, I could be wrong. But over time, if I continue to trade using this methodology, I know that I'm going to be successful, because I know that this particular strategy produces a positive outcome based off two principles. What is my risk to reward? Meaning how much am I risking for a stop loss versus how much do I stand to reward or stand to gain when I'm right? And the other question is, what's the probability that I'm going to be right? Is it 50%? Is it 55%? Is it 40%? Maybe it's 80%. In everything that I do, and this is something I talk with syndicate members about almost religiously on a daily basis, is a risk reward that is over 1-to-1, better than 1-to-1, and a percent accuracy above 50%. It could be 50.1%. That's all I need. At 50.1% with a greater than 1-to-1 risk reward ratio, I'm going to make money. I'm not going to make tons of money, but I have something that is profitable. If I can get 1.25 or 1.5 or 2-to-1 on my risk to reward ratio with a 50% profitable system, I'm going to kill it. As is evidenced by what we're doing in the syndicate every single day, because as of right now, we're not even through February yet. Nearly 1,000 pips of posted trades. And as I said before, there's no way around it. We post the trade when we enter, we post it when we exit, whether we lost money or we gained money. And then we calculate and we keep track of all that P&L. You get to see it. Now, it's not designed to be a signal service. That's not what I'm trying to create for you. What I want to do for you is I want to show you how we deal with it. And we were talking about it a couple of weeks ago, and we were going through a very bad week. It was just like one loss after another loss. It was like, 25 pips, 50 pip loss, 70 pip loss. And I remember posting out to the group, and some of you guys will remember, I just said, man, this is a rather impressive losing streak that I'm on. But we continued to trade the plan, and we came back. The drawdown was recovered. We're on to new equity highs. But you get to see it. The good, the bad, and the ugly. People wonder, how do professional traders get through the drawdown? How do they survive it? The mental torment that they go through, do they just not go through drawdowns? No, we do. We go through drawdowns like anybody else does. The difference between the professional trader and 99% of the retail traders is how we deal with the drawdown. I picked up a pasty note pad and I said, yeah, just grab yourself, keep these pasty notes close to your, this isn't pasty notes, but I said, keep some of those little yellow pasty notes close to your computer. And if you're having a bad day, you just take one of those off, you put it right over your profit and loss there. You can't see that because it doesn't do you any good to look at that. Can't do anything about your profit and loss. All you can do is focus on your trading. That's what separates the successful traders from the unsuccessful traders, are those people who continue to trade the plan, who've done the testing, who know that the plan is correct, and who continue to trade it even when they're in a drawdown. But what happens with you at the first sign of your drawdown? Do you continue to trade? Do you continue to just say, okay, well, I took a 100 pip loss on that one. Okay, let's focus on the next trade. Do you let it roll off your back, or do you lose sleep about it? I just lost 100 pips. Oh my gosh, I lost 100 pips. Do you get back in there and revenge trade? Do you decide after 2 or 3 or 4 losing trades in a row that system just isn't working, and so you go and you search for a new system, try and find the new great thing that's out there? Or do you focus on being consistent and trading your plan? That's what will separate you. That's what will make you a winner. What you want, everything that you want, is wrapped up in this idea of testing a plan, knowing the outcome of that plan historically, and then trading that plan religiously every single day. That's what makes the difference. If you want to boil down everything that I teach in a nutshell and everything that you learn in trading, that you will ever learn in trading, it all comes down to this. What do I trade? What are the exact rules that I trade? What is the outcome of those trades historically? And once I know that information, and I know that I have something historically that's proven to be profitable, coming in every single day and trading that plan religiously like a monk, like a freaking ninja, every single day. Most people can't do that. It goes against everything that our human nature. Most people can't do it. Most people struggle their entire lives, and no matter how many times I say it, and no matter how many different ways I explain it, no matter how many different systems that they might try, they continue to fail, continue to fail, continue to fail. And every single one, without question, without fail, not one single outlier, not one guy that I've talked to whose situation was totally different, every single one of them, when I dug in deep and talked with them about their trading, it came down to discipline and consistency every single time. Are you disciplined and are you consistent? That's what makes the difference. So in this case, this was a situation where I knew from a probability standpoint that this was a good long opportunity. It didn't matter that everybody else was bearish or the whole world was saying that the pound was going to parity with the dollar. I didn't care about any of that. I didn't concern myself. And so not only did we get not a little rally, we got actually a 300 pip rally out of this move. Lots of opportunity. And those people who did not listen to conventional wisdom, who traded their own plan, had an opportunity to make money, and that's exactly what we did in here. Some other stuff this week, a couple of weeks ago, I pointed out to you this breakout. We did make quite a bit of money here on dollar yen over the course of this last week. We've now pulled back down into this level. Now pay attention to two things. We've got trend line. This is the previous wedge pattern here, or pennant formation. We now pull back down into that previous trend line. Also, look left. We've got previous structure there. This could be a very nice buying opportunity for a press back up into 2200s. So keep an eye on that for next week. New Zealand, I guess New Zealand dollar. New Zealand dollar, I'm watching this carefully. I want to see this market rally back up into about 76.30s. If we can get a little more pop in there, we're going to be back up into this nice shelf of a previous structure support level. And I'm going to be looking for an area to potentially get short here in New Zealand dollar into next week. But we will have to wait and see what happens with that. Euro yen, pound yen, this was another one. Take a look at this. We made about 150 pips this week, or I did. I don't know what everybody else made, but I made about 153 pips on this, shorting this as we came up into the structure level. Market came down, boom. Or did I can't remember what happened here. I think we shorted it here, and then the market rallied back up. We've now double topped. Opportunity for a potential short here. Back down on the hourly time frame, which is our trading time frame, you can see we're right back up against that structure level. Pretty decent short. Your stops will need to go above, at a minimum, above this 83.65s, because that's the previous lip here on the hourly chart. But we'll wait and see what happens into Monday. I like to let Monday, the London session in Monday, kind of play itself out. That gives me an idea. I virtually never place trades when the market opens. I let the market kind of work itself out, run through a London morning session, and then make my decisions on the rest of the week after that. That's about it for this week. I just wanted to show you a couple of those things and really have the discussion with you about consistency and about not allowing yourself, first of all, don't allow yourself to get into a situation where you don't believe you can be wrong, because that is a situation that will kill you as a trader. And the second thing is just to make sure and to be cognizant of the fact and aware of the fact that ultimately your success is dictated by your discipline and the rules that you have in place. Because unfortunately, folks, if you haven't done the first part of it, if you don't have the system that you know is profitable, that you've tested historically, then you could be very, very disciplined with a system that loses money. And there is nothing, I don't care how disciplined you are, if the strategy that you're using or the series of strategies that you use doesn't produce a profit over time, then it doesn't matter how disciplined you are. You've got a negative expectancy. So be careful of that. Consider that. Ask those questions of yourself. And if you want to see what the syndicate's about, you're free to come in. We're getting ready to start the dollar trials up again. You can either come in now, it's like $50 a month, or you can wait for the dollar trial whenever we decide to put that together again. But just focus on that over the course of this week. That's really what I want to leave you with. Focus on your discipline. Ask yourself those questions. Do I have a plan that I know is profitable? Am I following that plan consistently? If you're not successful, one of those two things is broken. One of those two. So anyway, thanks, guys. I appreciate you being here. Leave me a comment in the comment section. Don't forget to subscribe. If you like the show, subscribe to it, and I'll be back next week for more great stuff. Until then, good luck, good trading. Talk to you soon.